welcome Sanjay Nayar to Network Capital. He's built his category of one, leading KKR in India, and now with solid investments in peak sustainability ventures. I've met him several times at Harvard Business School, most recently at the India Global Forum, and I wanted to invite him to Network Capital to learn more about what he thinks about India and Indian aspirations, his investment philosophy, and of course, the concept of couples who work well together, because him and Falguni have both done extraordinarily well. He doesn't do too many of these podcasts, so we are quite blessed to have you, sir. Thanks so much for taking time out.
Thank you. Thank you for having me.
So tell us about your early career choices and what guided them. Were you very sure that you wanted to go into finance?
No, not at all. Actually, we're from a background of railway family, railway parents, and basically in our times in early 70s, late middle 70s, we really went to more and more railway schools as my dad would get transferred, and finally I sort of settled down in Delhi at Delhi Public School, and then my folks went overseas for a deputation. I was left behind in a hostel, and my grandparents. So I think there was no thinking of what you're going to do next. So basically, after Delhi Public School, I went into engineering, and after engineering, I thought it was a good idea to get a job. So I went to work at Engineers India Limited. And I think the reason for that was I don't think we could afford a foreign university that time. And then we heard about CAT and IM. In those days, these things are not so well planned. All that we were told those days was you got to get a job and build your career because folks were overseas. Anyway, then we discovered the CAT. I went to IM Ahmedabad and graduated in 1985 from Ahmedabad. So I worked in Engineers India Limited, a public sector, for a year after engineering, then went to IM Ahmedabad. And after that, I just joined Citibank. Choice of finance, not really. I mean, yeah, once you're in Ahmedabad, you start talking about the great jobs. The great jobs are the Tata Administrative Services, the Hindustan Levers, the Nestle's, the Citibanks, the Bank of Americas. In those days, those were the 5-6 jobs. And frankly, I got 2 of them. Both were banks. I did not get selected in the others. And among the 2 banks, I just chose Citibank because they paid you maybe 1,000 rupees more than the other bank. And the biggest attraction was that you would get a bachelor accommodation wherever you lived. So those were big attractions in those days.
Right.
So that's how I joined Citibank. Yeah.
So no profound planning, IIT, IIM, and then you decided to go down this path. And I ask this question because there's a lot of pressure on students of having figured out everything when you're, say, 20, 25. And we notice as you speak to more CEOs, more leaders, that's often not the case. So it's refreshing that you also started out that way. And how was the start of your career? Were there some things that you did early on that really set you up for success?
Yeah, I think at Citibank, the best part was that you basically were hired by these big guys in those days. In those days, I still remember you had folks like Venki Krishna Kumar, Namu Pamdani, Jerry Rao. And you were interviewed pretty thoroughly, rounds and rounds of case studies and psychometric tests. And I think the rule there was you just come in and you're a management associate and you do what you're told to do, okay? So unlike nowadays, you have people who want to join iBanking and sales and trading or technology, nothing like that. So I started as an MA. They had some simple rules. If you're a Delhi boy, you will never get posted to Delhi. So I was not posted to Delhi ever. And the grounding you got was fantastic. So I started in the Calcutta branch, started as managing the customer services division and the cash counter, opening the safe every morning, shutting it every evening. And then you do 1 or 2 years of that, and you basically learn very early how to manage unions and labor, because you had unions in those days. So you got to get your work done, you want to get productivity done, and you also have to manage the union. So a lot of early learning, 2 years in Calcutta. Then it was Mumbai for 2 years, and then Chennai for 2 years. So I think 6 years sort of went by pretty quickly, but learning really the ropes. And I don't think we were ever asked that, would you want to now go into relationship management, or would you want to go into the treasury, which was really the sexy areas in those days. So for me, it was customer service, what do you call the middle offices in Calcutta, It was the bill discounting and the export-import department in Bombay, then Chennai, and a little bit of relationship management crept in my last posting. And so you basically learned along the way, and everywhere your bosses were fantastic, trained bankers. I mean, I worked with folks like Ajay Somdeep, Piyush Gupta. These are all the bosses that we had in those days. And then I just got picked up to go to the UK. Again, I think in those days, Citibank had a really, they really had those G kind of matrices, how to track people and where you're, are you ready for return? Are you ready for growth? Whatever. So they had those pretty systematic HR planning, which again is something you don't see nowadays, at least not everywhere. And for whatever reason, I got a chance to go run equity sales and trading in London. My kids were 1 year old, 2 years old in 1992. So I went overseas. And and from then on, it went into a trading and derivatives world. So did that for about 3-4 years. Then I got a call to go to the US to run fixed income sales and trading. Went to New York and did that. So maybe we stopped there because then there is a kind of a gap year when the Solomon merger happened. So I think the first, I would say 85 to 96 was the
11 years.
11 years was
years.
Citibank. It was the original Citibank with John Reed as the boss and mentors like, in those days, Rana Talwar, Nanupam Nani, Victor Menezes. These were all the folks you worked for, and Deepak Rastogi, biggest derivatives guys in the markets in those days. So you learned a lot, but I think what you learned in those 11 years is that it was all about, you basically went along with wherever the firm asked you to go. You didn't question. And these were good jobs in those days, so no one wanted to quit. Never thought of quitting Citibank. Never. I think that idea never came to my mind. Right. And you just went with the flow. And frankly, the flow was not bad, right? You went to UK very early, then went to the US. Falguni also got a chance, thanks to Kotak Mahindra Bank, to move there and start sales and trading for Kotak Mahindra, who had a JV Goldman in those days. The kids went to good public schools in the US suburbs. So it became a kind of good suburban family, all thanks to the career with Citibank. So yeah, I think in Citi you learned to respect bosses. You learned a lot from them. They were fantastic mentors. And at Citi, you had a great culture of celebrating people's successes, birthdays, anniversaries. And those things that we learned, we were part of the family of the boss, basically. Whoever the boss was, whatever level. So
but that's very different from what we see today, the culture at work, the things people celebrate. Can you tell us a bit more about the mentorship? Because you were following what the Citi bosses suggested, because you trusted them, presumably, because you believed in their competence. Would love some.
I think we just pretty much dependent fully on them. I mean, I can remember days when you just come home and talk about your boss and your day, and Falguni, you actually would get fed up. So why are we talking about Citibank all the time at home? But that's how it was. And, you learned a lot from folks like Bharat Sarpeshkar, again, Piyush, and then Victor. And you would always come home and give anecdotes. I don't remember anything particular, but I do remember, boss Deepak Rastogi in the days of derivatives. And they would tell you how bonuses were so critical in those days. When you got a bonus check, you would call into a room, you were given a bonus number, and he taught us how to not carry any expressions out of the room, okay? If you're too happy about it and you're smiling, you can go home. And if you're too upset and you want to cry, you can still go home. But don't carry, your face on the trading floor. Everybody knows what's going on, right? So, things like that. And these were like anecdotes you learn from these guys. I think extremely valuable, because when I go to the next part of my career, that's when things begin to change a little bit.
What prompted the change? Because presumably you're a well-settled family. Both you and Falguni, ma'am, they're doing well. The kids seem settled. You've had a global exposure. You like your bosses. You like the company.
Which you're referring to the one in KKR, or you're referring to what happened after? So after 11 years at Citibank, we merged, right?
Right.
And at that time, I got picked up. Fortunately, a lot of people lost jobs. A lot of people got posted out. I got picked up to go on the combined sales and trading platform.
Mm.
So that was good. Moved to Wall Street from Citibank Park Avenue. Did that for many years. And those were different kind of learnings. I mean, Solomon was a very different culture than Citibank. And it was called Citigroup by then. And very different culture. But those were the, as they call the big swinging guys or whatever, right? And we were like coming from a similar background, but never earned like them. We were never paid like them. We didn't behave like them. We were like completely a foreigner into that platform. You would go to the MDs. They had MD lunchrooms. You get 3-course meals. And MDs are discussing salmon fishing and fly fishing. And, and it's Greek to me. I never heard of these things. They would have this guy come and polish your shoes on the trading floor, and they would drop $50
Goodness
bills.
me, really?
Very, very different. This is 1997, 8. Okay, this is not like after the merger. And they would like get the guy will come and polish the shoe, and they would drop $50 here, and Anyway, great lifestyle. Learned a lot, I think, from those folks as well. But they were hardcore performance guys. Okay, hardcore. There was no issue of having these birthday parties and anniversaries. Maybe we would do one, kind of a bake or something in the summer afternoon in New Jersey at some MD's house. But I don't think it was that culture anymore at all. So I missed that completely of Citibank. We had totally gone into a different, and I'd gone to the Solomon side, so it was quite different. Anyway, long story short, I think learned really what markets were all about. That was a hardcore markets job. You learned risk, you learned monetary economics, you learned rates, you learned everything that I learned. I think technically I learned in those 4 or 5 years that's on the Solomon platform.
And you learned most of it on the job, you presume?
On the job, yeah. I mean, I had done sales and trading anyway at Citibank also. But there, when you go, first you're an imported guy. You've come from the outside, although, with the two had merged. And but very hardcore, a lot of travel. I used to look after pretty much the global emerging market sales and trading. So I traveled a lot to London, to the West Coast, based in New York. So a lot of travel, but great exposure. I don't think I would have got that ever in my life. And very quickly got a call one day from HR that we're looking for CEOs for India, and we're opening up 5 markets where our chairman in those days, Sandy Y, wanted to really double down on 5 countries. So I mean, that's the vision he had, and acquisitions were on the cards. They were looking for CEOs, real CEOs, not these titular heads. Foreign banks have these titular heads. This was a real CEO job, where the consumer bank, the corporate investment bank, consumer finance, credit cards, everything comes under one guy. So it was a great opportunity, and we were very reluctant to move, actually. That's another learning. By then, we were so well settled in suburban life in New York. Falguni was well settled. The kids were like 11 years, 2001. And then I get called by the chairman, and I remember Victor, who's my mentor, was still there as the vice chairman. And I said, look, why am I being uprooted again and now go back to India? And I still remember Victor telling me, look, Sanjay, this will be the best job you'll ever do at Citi. He was a CEO of India at the age of 42, 43. He was the first CEO of India. And he said, look, you just trust me, go back. You will enjoy it a lot. And it'll probably be the last job you'll do at Citi, because you will never like any other job at Citi after being the CEO in your own country. So I think that was pretty and this is real, okay? And
he's your mentor, so you have to take it very seriously.
He was a mentor in the sense there was one senior guy still surviving after the merger. Okay, that's
right.
And he had he's just been a friend. Even recently, we caught up. So, yeah. And that's the decision we took. And we uprooted everything from New York. And lo and behold, came back to India in the end of 2001, just after the World Trade Center.
I see.
So, we were here by November, December. And by March, I had taken over. March 2022, I got the CEO role from Nanu Pamnani. Nanu was the previous head, who very gracefully handed over, taught me a lot for 3-4 months of transition. Totally different world. So, you come from trading, then you come into an empire where you had left 11, 12 years ago. And now, it was a great feeling to come back, because, coming back to India, by the way, in those days, even today, it's so difficult to settle into Bombay.
Yeah.
Where do you get your club memberships? Where the hell do you get your house? And you come back as an expat CEO in your own country. The house is there, the car is there, there's a driver, there is automatic club membership. But these things matter in India. They didn't matter in the US, because you got everything, right? I mean, once you pay your council taxes, you get everything there. So it was good fun to come back. Falguni went back into Kotak. I think she began heading up iBanking and capital markets. And I became like a full-time CEO. So I think that part of the career, and that's where I brought back a lot of the learnings I had at original Citibank. Okay,
Right.
and that's where I really created a culture of, we had performance, of course, which I had learned at Solomon, but also I celebrated a lot of deal wins. I celebrated even deal failures. And because we had a lovely apartment thanks to Citibank, we used it so much. I cannot tell you how many parties, informal, formal gatherings we had. And we brought back the old Citibank, tried to bring back the old Citibank culture. For the direct reports to me were like part of the family. 2-3 level down, we would celebrate real good heroes for some wins and some awards. We put lots of awards in place. So we made that old culture again. And basically, we built a really successful, big universal bank in India between 2000. I mean, Nano had done a fantastic job. But from then on, we built more iBanking, we built more capital markets. PS Jayakumar built the whole consumer bank, consumer finance, credit cards. I mean, this was the most innovative platform and high growth. And I remember in those days, ICICI, HDFC would emulate a lot of our products. They would have a bigger distribution than us. So they were far more scaled than us. We were always handicapped with scale because foreign banks were never getting too many branches from the RBI. So great learning there. I think I still remember those days. A lot of people remember me from Citi because those 7-8 years were very, very impactful. And then we can
for your learning, for
my learning, actually, you think of it, became more like an enterprise manager. Every day operating reviews, every day, go make a pitch here, go make a pitch for business here, but more and more of operating reviews at 4 or 5 countries. So country reviews, travel to the countries, meet regulators, a little different. I mean, totally different than Solomon, where you went on the trading floor at 6 in the morning and left at 4, okay, and there was nothing else to do. You know how New York life is, and in India it never ends. You start in the morning at 6:30, come home at 6:30, and again start calls, constant. So those 7-8 years were very, very long hours. But I really developed all my corporate contacts because as a CEO of a foreign bank, you meet all the CEOs, all the chairmen. So really got a totally new angle, which I never had before. And which, in fact, you don't even value in America, but you value it in India. So many corporate contacts, knowing absolutely anyone and everyone I got to know through that job for 7-8 years. And we would also do a lot of client parties at home. We believed in that. Sometimes called the Tata Senior, sometimes, pharmaceutical companies. In those days you had there was different kind of a client base in those days, changed a lot now. Yeah, so we really enjoyed it. And that's, I think, when the financial crisis happened.
Yeah.
And then I think we come to your question after that. So financial crisis.
That must have been a very tricky time.
It was painful. Yeah, it was painful because the financial crisis, Citi was among the worst hit, right?
Right.
You remember, I mean, not only did our stocks completely get crushed to $1 when we were kind of bailed by the US Treasury. But I think what changed for us in the emerging markets was that we were not getting the same attention from the head office, which you would get like as a CEO, right? And as you would, there are resources we need in countries to do business. You need cross-border limits, you need risk-taking ability, you need a cost budget, to build big franchises. They don't just get built like that. You get a lot of allocations from the head office.
Right.
And I think we were not constrained, but I mean, we were just not in the scene of things because they had just so much to worry about in New York, right? So we would go like every 3-4 months to New York and have meetings that were just burdened with regulators sitting on our head. So it wasn't the same excitement that was there. Anyway, the franchise was doing very well. In India, I still remember that because of the crisis, we got called by RBI and said, look, I hope the head office is fine. I hope India branch is doing well. People thought that a lot of foreign banks will have a run on the deposits. So I had to step up a lot in terms of visibility, press. And I still remember getting a call from the then finance minister, Mr. Chidambaram, saying, look, any help you need, just call me. we don't obviously want any damage to the franchise, right? And nothing to do with India, but just the onslaught of what was coming from the US. Yeah, so those were great days. We did well, and when things settled down, I began meeting Henry Kravis and George Roberts a lot in Davos. I used to meet them every year, and I think they had made up their mind to open a private equity franchise in India. And Henry has a lot of contacts in India, and he was pretty focused on trying to hire me. So we met a couple of times.
So he had already made up his mind.
He had made
the
up his
meetings.
mind. I mean, he was made up his mind. He was quite sure that if I want kind of, if I'm not going to get a ready-made investor in India, right? In those days, in 2008, if you look at the franchise that were there, it was really Warburg and Chris Capital, right? Frankly, in those days, we were very late entrants, very late. We were the last, actually, if you ask me. So I mean, he was quite focused on saying, I can get a banker and I can train him. And I think we got to like each other. I liked the promise of private equity. And I think Henry's only view was, look, you're not an investor, but don't worry, we'll make you one. And what we need is we'll monetize your knowledge of India and want to monetize your contact base, your Rolodex. And not in a negative way, but you'll help us create good businesses and carry forward the culture. And I think we had spent many hours, and I think we got a sense of the culture and value systems. It all boiled down to culture and values for them, for Henry Kravis always. And for me also, I don't want to go into another culture where Citibank, you have politics, you'll have silos, geographies, regions, head offices, enough of that. So the only motivation was, and it wasn't money, right? Because there was no money on the table. KKR and all don't hire by putting money on the table. You earn over time. So yeah, it was a quite a dramatic shift. I took very long to decide, actually, and Falguni really pushed me and said, "Look, you got to make up your mind. You're speaking to KKR. You're not like you can't make up your mind. You got to decide." So finally, I think we decided to switch and start from a small suite at the Oberoi Hotel.
We actually talk a lot about career transitions, and this seems to be one really important one. Can you just help us think through your decision-making matrix at the time? What are the conversations that you're having with Falguni, with yourself, and like how did you decide this offer?
I think the exciting part, but I think there were 2-3 obvious ones. The obvious ones were that and I'm always looking for a change. I mean, I cannot be in one place, one thing for like 5 years. I do get a bit
even within the same company.
Even as city CEO, I was entering my 8th year, and I could feel, or 7th year, and I was feeling, every day same thing, right? Of course, you go to Delhi, you meet ministers, you make pitches to public sector, all that is fine. So there was that bit of restlessness that comes into me every 4 or 5 years. And here I got a feeling that this can be very interesting because you can build long-term businesses here, and because you do, in a way, become an investor, you do have kind of a say in the markets. You have you're useful to the entrepreneurs and promoters, and there's a lot of corporate finance involved in mergers, demergers, which frankly I love to do, but as a CEO in Citibank, you don't do any of that, right? Because the others do it. Right. So here you become a complete laborer day one. Okay, actual laborer. There is no one to help you. So that's how we started. And I think the exciting part was, A, it was a change. B, it was a continuum for me to be in India. And that was important because, again, go overseas for what? I mean, another big job at Citi, then what, right? So that it's a never-ending career. And I got an opportunity to work with probably the bluest of the blue private equity firm, which I would never have got if it wasn't for Citi. So if you look at the thing, why would I have a reason to join KKR when people come out of the MBAs and Harvards and join them? I was none of that. I was just a banker in India. So I think the positives were the continuum to be in India, to be able to, and I was 2008, I was 48, right? Yeah, 48 is when I resigned. 49 is when I started KKR, 49 years. And I think the other positive was, I think the negatives were actually quite a few. I used to keep worrying about the fact, where will I get my paycheck? And what is the paycheck? Because they don't tell you anything. You just join and then you're told, look, here you get $300,000 and that's it. Okay. Don't ask for anything else. Everything follows. And, I was worried about losing the perks of Citibank. So we had these funny things. And my dad was alive at that time, then he would say, look, it's fine, you do what you like, but I hope you get the same money as you got in Citibank. And I said, there's no way I can tell you that, because I don't ask, in those days, you don't ask people like Mr. Kravis. And it was a small firm. We were only like 15, 20 partners. Anyway, it was great. We made the switch, I think a lot pushed by Falguni, saying, look, it's different. You don't have to leave the country again. Now we can stay here. Parents were getting old. Kids were in school, getting ready to go to university. So I think it worked out well. I don't think there was too much of brain damage, except, am I going to get my perks? Am I going to get a basic salary when I make money in the long run to sustain our lifestyle? And then, you end up losing the apartment and everything, right? So then you're going to start all over again. Luckily, by then we had an apartment, so it was fine. But, these things matter. That's how the upbringing has been, that my basics should be taken care of.
Yeah. No, I can totally imagine.
But that's the reality.
It doesn't sound silly at all. Like you, with Mr. Kravis, you probably will not sit down and discuss finances. Although that, it does sound a bit surprising, because many people may not be aware of the dynamics at the time. But I can imagine why the conversation would be very tricky. And they would the payouts in private equity are also different. The time horizons are obviously very different from your
all
previous
that
industry.
he told me was that, look, we just take care of everything. Don't worry, okay? And I'm saying you can't. And for them, what I learned, and we should talk about that maybe next one, is that the word is their bond. You gave a word, it'll be done, okay? Now, what that means, I have no idea at that time, okay? And they know what I was making at Citi. But, it doesn't work like that in KKR, right? Or in any private equity firm. You don't get this kind of, you make money only over time. And after you perform, and you get paid only on the exits. So it's not like you're getting front-loaded comp, right? Like in banking.
Yeah.
So, but yeah, I remember Henry telling me, don't worry about this. In 5-6 years, you'll forget about Citibank. And, I've more than forgotten about Citibank, frankly, thanks to the KKR performance and thanks to the firm. And I learned a lot of things in that firm. Yeah.
We would love to, because when I told some people that we were hosting you, they were most interested in your journey at KKR, because it also gives a sense of India and India's aspirations. But now that I listened to your city stories, I actually got a deeper glimpse of how that was perhaps as interesting as well. So tell us a bit about KKR. And you joined there. You have to basically build the business from scratch. How do you go about?
So we had only one investment made before I joined, out of the London office. So basically started the Oberoi, April 1, 2009. My retired secretary from Citibank moved along with me. And that is it. That's how we started. I think the first few things that happened was, I was told by Henry and George, especially George, that please travel. You don't have to do a deal, okay? Travel and meet all our offices, meet our partners, and just see the strength of the global franchise we have. So I was on the road for a month. Obviously went to Asia, which was the head office for me from that perspective. Joe Bay was the boss. Joe is now the co-CEO for the firm. And then went to London. Those days we had Johannes, Todd Fisher. Then went to the US, East Coast, West Coast. And did a whole shebang. And it was a small firm at that time. And partners would just take out time. We had lunch with everyone, dinner with somebody else, spend hours and hours talking about what kind of deals they do. And they'll all ask me about India. And you get so much of respect. I mean, I'm meeting these guys for the first time, okay, after having been hired. They have time for you, they look you in the eye, they have patience, most gracious with just the action. I mean, you learn so much with this firm that I can't even describe it. And I got a really good sense. And then I got a good sense of what the global connects can be to bring the power to India. Ultimately, my role was to obviously bring the franchise power to, like in Citibank, you would obviously go pitch for bond syndication and equity IPOs, global capital markets. Here, you have to pitch for what industry expertise we can bring in. Have we done a deal like this in the US? What did we learn in that deal? So it's a different ballgame how you add value to these companies. Second thing, I still remember George telling me, or was it Henry? I don't know. Said, look, you're not an investor, but you learn, and we like to get one guy to come from America and be with you for a couple of years. And got a really good guy who's now heading private equity worldwide. His name is Nate Taylor. So Nate came down and spent 2 years with me at the Oberoi. We built a small team by then, and we did the first few memos together. He did the IC with him leading the way. So I also learned presentations don't have to be too long. They have to be very crisp. You own up to all the negatives first, then talk about the positives. It's never.
Right.
I was more a salesman, right? I mean, you come from banking, you're a salesy guy. And it takes long to change that, by the way. So it takes very long. But I think KKR teaches you that extremely well. If you have the conviction, you make the pitch, but you also have to give an equally balanced view on what if things don't work out, or
Right.
what can go wrong. So that's one huge, huge learning that I had. So then, of course, Nate went back. We had a full-fledged team. We grew the business in many directions, became a pretty full franchise. Even today, it's one of, I think, still the best franchise in infrastructure and private equity. I think the second thing you learn, which I learned actually, is the culture and values are just talked about by the two chairmen and the two CEOs all the time, all the calls. And it's about being transparent. Obviously, it's about integrity. It's about teamwork and using the global franchise, not just your franchise. And, giving kind of the bad news first and quickly. And so I think those are value systems that not seen in the new city. I'd seen in the old city, but that was a great learning. And suddenly, you hardly have a 5-hour day. You don't have a 12-hour day, because what are you going to do? And you can't do a deal every day. It's not like you're pitching for business, right? You got to create deals. And then I think the other thing they taught you, and I think that I actually was already good at that. And I still remember they used my name quite a bit. They look how Sanjay does it. Is you got to go out of the office. You got to go meet clients. You got to, and you call them clients. I think I was the only guy who used to call the companies as clients. So I was used to this client service model, right, of Citi.
Right.
And that actually became quite a hit in the firm as well. That you got to go and reach out. You can't be sitting inside the firm and expect, bankers to bring you deals, because by then they've already shown it to 10 other guys. You got to go out. You got to work with the entrepreneurs. You got to see, what the issues are in their balance sheet, in their businesses, what's underperforming, what's overperforming, So you got to create deals. You can't sit there and wait for deals to come. Of course, things have changed now, because now there are so many banks, private equity, so mature, deals are coming through the door. Now we're refinancing each other. But that's a different. In those days, we had to create deals, and we created some really good deals.
But isn't that hard? Isn't that difficult? Like creating a deal? I'm not sure if private equity was mature by then. I know
it was not, but I think that's the change.
Yeah.
We really brought that change. I mean, we were one of the last guys. But you see, if you look before us, people had really put money into companies as minority trades and made a lot of money. If you look at the late 90s, Chris and Warburg with Bharti, HDFC, I mean, they made multiples and multiples of money, and good for them. But by the time we started, the valuations had gone up a lot. After the GFC, they came down, and then again they ran up. So in fact, some of the vintages didn't do well because we had overpaid for them. But when you do minority deals, I think we learned very quickly in the minority deals that we did, you really did not have much to do with the firm. And you think the entrepreneur is listening to you, but he's not. And he'll still do what he wants to do. And you know the risks of that in at least the last 10, 15 years in India, where it pertains to governance, it pertains to allocation of capital in that company. There's no discussion of return on capital. It's very different. You're a minority guy, so you sit on the board and you behave yourself, and hopefully things work out. After 3-4 deals, we just pivoted to complete buyouts. And that is when our success, and until today, we are reaping the success of Max Healthcare, Avendus, JB Chemicals, and we just pivoted. Now, to create control deals takes a lot. If you want to create the deal, you got to spend time with the entrepreneur. You got to first do your own homework and research. In which industry, what is happening? Is consolidation happening? Is their capacity is critical? So you've got to double down. And then you've got to spend time with the entrepreneurs, and he's got to begin to like and trust you. He's going to give you a significant stake. And all of them have generational issues. All of them have succession planning issues. They have their own wealth issues. no one just gives you a company like that or a significant stake at least.
Right.
So I think that trust, camaraderie, spending time, I think those are the qualities at least my team and I really brought to the table, rather than walking in there and saying, hey, we can buy a company. Nobody sells you a company like that.
Like that.
So I think that took long, but that culture I think we really did very well, and it continues even today very strongly at KKR. So I think that was the big thing.
I wanted to ask you about your investment philosophy. So, the way you evaluated businesses at the time, you obviously had sector insights. You knew where to look for. But could you just walk us through, one industry or one deal that you did?
I mean, the easy one to talk because they've exited now is Max Healthcare. A very complicated deal to create. It took us about a year and a half to create the deals because the parent company was demerging the real estate business. We did not want the insurance business. We just wanted the hospital business. And then, so complicated, but let's leave that aside.
Yeah.
Then we found in Abhay Soy a fantastic entrepreneur who had 2 hospitals already. And he was looking for some funding to repay some other debt. And we got a significant stake in the 2 hospital platform. And we agreed with them that at some point in time, when we get a chance to buy a bigger chain, because these 2 hospitals for us, 49% made no sense. But, we're happy to go with you. Let's go build. So in the beginning itself, we agreed with him that when we get something unique to buy large, then he will be the promoter, he'll be the founder, he will run it. So that was a great creation of a deal. And the Max Healthcare deal came along, and we merged our 2 hospitals into that. And then through a reverse merger, we got listed. And we made Abhay the CEO till today. He's the chairman and MD. He's done a fantastic job. Now, what do we underwrite there? I think we, first and foremost, we can underwrite on Excel spreadsheets what we like. It doesn't really matter. Okay? It never turns out that way anyway. So here you underwrite with the entrepreneur himself. So one philosophy we've used is, if you're bringing in a new CEO or we are backing an entrepreneur, let's go underwrite the deal with them. What exactly are the growth? How many beds do we want to have? How many hospitals? How much of brownfield are we going to do? How much greenfield? Again, it's all on paper, of course, but it's the guy who's going to run it telling you what can be done, what can't be done. Right. And, I still remember underwriting, that platform was hardly 8 to 10% EBITDA margins, and Abhay felt very confident that we'll be in the 20s. And we paid in those days a pretty steep price because the margins were low, but Abhay was so confident that he could cut the cost and take so we play on the EBITDA margin. So I think for me, the main thing is you've got to have growth. India is all about growth. You've got to have top line growth, you've got to have margin improvements, and all that it takes to get there. Because in India, we're anyway paying expensive multiples for everything.
Yeah.
Whatever you do today also, there's no cheap deal in India. Okay, so you have to really grow the top line and grow the EBITDA margins. And it can take many strategies to do that. So in the hospital case, Abhay really implemented a fantastic strategy over 2 years. And, we may have entered, I forget when, 30 times EBITDA. And we were very soon looking at 15 times EBITDA because he had dropped the EBITDA up so much. And today, I think it trades, I don't know where it trades now, but we made about 5x in rupees. And we got out of it. And, I think it trades some crazy 30 times EBITDA now. But that's okay. So that's one, is that you've got to grow the top line. You've got to have a clear action plan, how to improve margins. What are the areas of improvement have to be documented and agreed with the entrepreneur, because we are not running the company, right?
Right.
Second philosophy is that from the beginning, we were, at least I believe, we put good governance in place from day one. Good board, diverse board, and we work through the board. If we have any issues with the management, we do it outside the boardroom. So in the boardroom, we are one. Very important, because you don't want the independents and other board members to feel, KKR is throwing their weight, or I'm throwing my weight around, or, we are, open debate with our own CEO. It doesn't look good. That's second. So third is, you've got to make the changes in the management if you're not happy with them or with the CEO very early, not later, because then it gets too late to make the changes. You've got to move very fast in some of these things. Fourth, I would say, every deal has some angle where we can bring in our global connection. Every deal. There's not a deal I think we haven't done where we have not tapped into the globality of KKR's experiences. There's such an experience of 45 years now. So you got to bring that in. I think the other one that I think we did well and we still do very well is that we've got to be real about the exits, okay? Because ultimately you make money only on exit.
Yeah.
So we think about exits very clearly in the beginning. Will it be an M&A exit? Will it be an IPO exit? Or whatever it is, right? So we got to think of that early on. And that every industry is different. Like in hospitals, we were sitting on such a big chain. There was no way we were going to exit through another M&A, okay? We knew that this stock has to become more liquid, trade more, and we will over time sell, and that's what we did. Things like Alliance Tire that we bought from Warburg, made it bigger and better. We knew that this could be IPO, but a Japanese strategic came along and gave us a fantastic bid, so we sold it. The catch here is that I believe the exits have to go into stronger hands than yours, because the legacy only gets built up if your company is done well after you've exited. Otherwise, a lot of people feel that private equity firms dress up the company for an exit and do all that. Okay, not one deal of ours, at least until today, has been like that. And I'm no longer at KKR, but I think the team is doing a superb job. You exit and let the other guys make more money because your management is also very happy. Your CEO hopefully transitions and he's happy. Very, very important to leave a legacy of good exits where, so like in Max, I don't know where we sold, I forget the numbers, but I know that stock is trading higher than where we left.
Significantly higher, yeah.
It is. We sold Gland Pharma to Fosun of China. They listed the entity. I think it's trading 3x of where we exited.
Yeah.
Okay. And yeah, so I think you've got Alliance Tire went to Yokohama. I still remember the guy who did the deal from Japan, he became the CFD. So, it's, and Alliance India today is a very significant part of the Alliance Japan story, of the Yokohama Japan story. So I think you've got to exit in a good way to build a good legacy for your firm as well. I don't have any other big words of wisdom, but I mean...
But this is fascinating. I mean, there are many philosophical insights here. Especially the last one, because private equity, the kind of books and media, the way it has often been depicted is vulture-like occasionally, at least the books that we read about. And what you've described and what I've seen from Ashish Dhawan, in Chris and some of the others is that there are ways to leave the business stronger.
Yeah.
And that's the way legacy builds. A very important point. Thank you very much for sharing. Do you mind telling us a bit about how India changed in all of your evolutions? So you studied in India, you built your early career in India, then went abroad, came back in, but now you're actually doing big deals in India. And now you also, run another investment organization. Give us a glimpse of how India's changed, how it has surprised you. Are we a superpower and all of that?
So look, firstly, I now retired from KKR and I set up an early stage tech fund called Sorin. Part of the backing is from our family, is a significant LP, and so is some KKR partners, including Henry and George and Joe and Scott. So it's a $175 million fund, made 6 investments. And for me, again, I'm just applying the same culture and values lens to building a team. We've got 2 managing partners, team of 7 people. So that's Sorin for you. I'm just doing this quick recap for you so you know where I come from, India. And then we are doing another one with another partner, Samir Shah. We're launching Peak Sustainability Ventures, which is deep tech and climate and sustainability. Yeah. So we're just launching that. I mean, I advise pro bono the government of India on some matters like trade and commerce and, some projects here and there. Yeah, so I'm going to keep very busy doing all this stuff and a couple of other advisories that I do. And of course, I help Falguni when she needs help, which is not very often. So that's my sort of day job. I think and because I do kind of this thing for India, and I've been pitching to LPs to raise money for this climate fund as well as our tech fund, my view is that India has changed quite a bit in the last 10 years at least, right? This government, I mean, I can only reflect upon the last 10 years. I can even think longer back when I came back to India in 2001 to run Citibank, 2002, that time the reforms were just kicking in, right, from the previous 10 years. It takes 10, 15 years for reforms to begin to show up. They don't show up tomorrow morning. Yeah, okay.
Yeah.
So when I came into, I remember Citibank, 2002, we were entertaining project finance deals, an expansion of Reliance, buying of Chorus, Land Rover. I mean, these were big deals coming to foreign bank tables and Indian banks. There was real expansion, there was real capital investment happening in the early 2000s. And then that lasted you until the financial crisis, when you got a massive consumption stimulus from the Congress government, which then took us through the financial crisis easily, but then created a big consumption bubble, which then came down. Because consumption stimuli never last, okay? And so that came down, and then you had the whole overexplosion of balance sheets of corporates and the banks who had leveraged too much because everybody put on capacity, thinking that there was a real consumption boom, and it wasn't. It was temporary. And that's when the whole 12, 13, 14 has taken us a long time to wash out all the banking debt. So anyway, now comes in the new government, 10 years. I think a couple of big changes that really matter, even at KKR, I was still there, obviously there. One is that I think there was definitely a focus on governance that came from the government itself. Even today,
Right.
if you look at governance standards and the work ethic of this government, they really work very hard. Their tracking mechanisms, execute projects, very execution oriented with fairly high degree of conviction at a very broad level. I'm just giving that. Second, I think a lot of things have now become very transparent, frankly. And again, we are not involved in any of this. It didn't hurt us at Citibank or here, but just reading the press and knowing some examples. Now, auctions of resources, spectrum, everything is now e-auction. It changes the ballgame completely because then you have lesser examples of crony capitalism, and we know that for a fact. Okay, so people are winning mandates; they're winning it, by paying top dollar, and that's fine. So I think that's a huge change because what that does, that really gives confidence to the foreigners and the investors that
Right.
this is not going to be a mug's game if I come into India. That I think is the biggest change that's happened for the positive. Now, having said all of that, there are a lot of issues why the foreigners are still not coming, and we can talk of that. Second thing, I think the big thing is that in the last 10 years and most of the last 3-4 years, we are beginning to occupy a pretty major position on the global stage. Partly geopolitics, partly our growth rates are obviously looking higher than everybody else's. Inflation is sort of under control. Rupees depreciating, but sort of not very volatile. So macroeconomically, I think we're looking more stable. And I think that is standing out in a world of instability. So that's number two. It doesn't, again, by the way, in absolute terms, I'm not saying they're like rock stars, but all that I'm saying on a comparable basis look very stable from a macro point of view. And that is important as well. Third, I think the global order is clearly changing. It's no longer a very global world, right? It's becoming quite insular in a way. And there, I think India's consumption and big domestic market really helps us if we can address the consumption issue.
Yeah.
Because then you're not dependent on outside, although our exports are going up, not like going through the roof, but they are going up. The fact is that we have a big domestic market. If we can really catalyze it, increase the consumption and the per capita GDP, we don't have to look outside. So that is a big thing that's standing out in a world that is becoming quite inward looking. What else? And I think there's a lot of focus. I mean, I haven't seen too much of evidence on. Sorry, the other one, of course, is the whole focus on digitization that this government has put in, and digitalization, you call it, and last mile finance delivery down to every family. Subsidies don't go wasted, they go straight in your account. I mean, these are big changes that have happened. They may not be huge reforms, but the execution and using technology, governance, e-governance, and making you proud about India for its stability and a big domestic market. These are some of the things that are, I think, big shifts. Now that, as I said, that doesn't mean I think we have a lot to do here. Because frankly, the consumption is still not that high. The consumption is not high, therefore the capex utilization is not high. The capex utilization is not high, capacity. Fresh private investment is still quite, I mean, there are green shoots, but it's not like booming. Right? So that whole circle has to start. And, hopefully this budget, the way they're trying to allocate capital towards infrastructure again. Look, finance minister had a choice of giving an easy stimulus again. They had a lot of money because they got the RBI dividend. They could have given a consumption stimulus, but she didn't do that. She, in fact, went the longer, more sustainable route to create jobs and manufacturing, create per capita GDP. It'll take time, but I'm saying that's the most sustainable way of doing it. Of course, economists can argue that a consumption stimulus may have been a good thing to do also, because then you get a little bit more acceleration in consumption and hopefully private investment comes in. So I'm not an economist, but I know enough about the economy from close quarters and from my role at KKR, because companies get impacted. So this is one part. The other part is that the stock markets and the markets are on a different plane altogether. And they have been driven by just a lot of surpluses coming out of the mutual funds and people putting money into mutual funds. And not necessarily foreigners, but Indians. And in a way, it's good that we are no longer dependent too much on the foreign money, but local pools of savings are building. However, the way the markets are valued, they're very expensive. So I just hope folks understand, that things can also come down a little bit. But in the bargain, everybody seems to be putting money into mutual funds, and therefore you see bank deposits actually coming off a little bit. So there are all these pros and cons going on, but there is no shortcut to per capita GDP, full stop. Per capita GDP has to go up in the next 5 years. And also the sharpness of the pyramid has to become a bit broader. Now, these are all great statements, but to get there will take some time. I think so. That's probably the big changes. But the big thing is now is that taxation policy very consistent. We had this LTCG up and down, but frankly, it's come back to normal, right? But if you look at overall consistency of policy, predictability of getting your tax returns, predictability of governance, that has come a long way. So now if people don't invest, there must be a reason for it. Okay. So you want to have a better environment to invest, because unlike 2012, 13, 14, the corporate balance sheets are in great shape. The banks are under-levered, cleaned up. So now is the time to tango, really, frankly, if you ask me.
Right.
But it's still to happen. It's still not happening. It has to happen. But let's see.
It's work in progress. So do you have 15 more minutes, or would you need to wrap up now?
No, it's okay. We'll be talking.
Okay. So just like on this front, I've heard you talk about it before, but have you seen a shift in Indian aspiration as well? You invest and meet a lot of founders, you meet politicians from around the world. Has that happened at all?
Aspirations are definitely changing, definitely. And they reflect in different ways. I think the biggest change I have seen is that entrepreneurs really want to build big businesses, and they want to scale up, and they want to make money. Okay. Now, money comes much later, but there has been definitely a boom towards entrepreneurship. Never have I seen so many people coming up with so many business models. And in our new fund, which is the early stage tech fund, we see so many deals every week across the board. So yes, aspirations have changed. So that's one area where not actually youngsters, mid-career professionals who quit from good firms are starting real businesses, which are a real solution. But anyway, we've been through the past where real solutions, if you don't have, nobody's going to underwrite. Now people want to build tech-led companies or whatever, which are addressing real problems. So I think we're seeing a new generation of mid-career guys coming in, which is great. The other one is that people, I think after
Why
COVID,
is that great, sir? This is a very interesting point, but I'd love for you to extend this.
I think that, look, they bring, firstly, they put some of their own money. Okay, a 22-year kid is not going to put his own money. These guys are putting their own money at the age of 37, 38, 40, or they're giving up a salary. So there is an opportunity cost for them. Secondly, they come from areas and they're trying to build businesses in health tech or in marketplaces or in space, fintech, where they know what problem they're trying to solve and where is the gap. which they are trying to bridge. So all experience, when you come with experience, it's a different ballgame, right? It's a fact. So I think that's one aspect. The second aspirational change, I think after COVID, which I'm bewildered with, is the amount of experiential travel Indians are doing. It is mind-boggling. Uh, Hospitality is booming, aviation is booming, and everybody wants to own a home. It's a big home ownership change going on.
Right.
And frankly, the savings to GDP hasn't changed. Actually, it's come down a little bit. So really, it's happening at the top 2-5%, which is making the impact. Obviously, it needs to, as I said, the pyramid has to become a bit more flattish. It's too sharp.
Yeah.
But the power of numbers is so strong in Indian population. Even the top 2.5-3% start buying their homes with or without loans and start traveling the way they're doing. I mean, this weekend I hear in India, everybody's traveling. You got a 4-day weekend, a 5-day weekend. This is a big change. And I met the CEO of Marriott recently, and Radisson, Starwood, all these people are visiting India to open up 400 more outlets, 600 more outlets. So there's a significant boom, I can say confidently, in real estate, in hospitality, and this. And that is all because of changing aspirations of the Indians. Yeah, I think those are the two big shifts I see.
That's a really important point. Savings to GDP ratio, the pyramid getting a bit more broad, and just like subtle ways in which Indian aspiration gets felt online and offline. Thank you very much for sharing. You made yet another career change. You talked about Sorin and Peak Sustainability Ventures. Why? And again, back to career transition. What prompted that?
Yeah, great question. A very simple answer. But I'm not going to sit and play golf. Just happy to get my tennis or workout in the morning, and I need an office to go to. Pretty straightforward. Okay, can't sit at home. My friends call me, a guy who's got wheels in his feet all the time. So I think it's very simple. When I was retiring, and again, our retirement is like 2.5 years, right? You just don't walk out of private equity. You help with the portfolio, help with the team. All that is you doing. I think I got the idea of doing early stage tech fund actually with seeing Falguni's success in NYKAA.
Yeah.
We said that to the family, so we put some money into it. That's fine. So, in fact, again, debating with my KKR seniors and with some other friends in India, I think we came to the idea that if I could bring my 4 decades of business building, I mean, I don't have any tech knowledge here, frankly. Business building knowledge, again, the same culture, values, connecting the dots. If I can bring that to the table for young entrepreneurs, and that time, this whole thing was changing, right? If you look at 2 years ago, you had some blow ups, you had some small disasters, and that's fine, it happens everywhere. So we thought we can differentiate by putting my own time into this. So raising money was quite easy, touch wood, because of backing from the family, backing from our other family in Hong Kong, and from the KKR partners. So, and then we raised money from the SIDBI and SRI and some other HNIs. So now we've done 6 investments, team of 7-8 people. But the big transition for me is that I'm now not doing a 6 o'clock, 9 o'clock calls. Okay, even KKR, I would have to attend, some 6 a.m. meeting, some 9 o'clock meeting, which is fine. I don't mind doing it. But now I'm more free, and I'm just realizing how inadequate I am, frankly. I don't have any idea of AI. I don't have any idea of this Gen AI stuff. I hardly read any books. I'm always a newspaper or a magazine guy. But now I have the time to pick up some of these things, which I think I have to. And I'm learning it from these young kids I've hired. They are just such different thinking guys in the tech world. And I'm actually able to give a lot of time to these young entrepreneurs. When the investments we make, I spend a lot of time with them, and I love it. Right? Talk about the business, the last quarter didn't go well, what didn't go well, what's the path to profitability. But you've got to be, again, like I said earlier, you've got to be encouraging. You cannot be condescending. You cannot be sympathizing, but you've got to help them because you put capital there. And they really are actually lapping up that advice. Good or bad, I don't know, but they're lapping up my time. It's great. So I love that part. So did we put too much mind into this transition? No. Point was I was going to have an office, made an office. we said we'll raise a fund. It doesn't clash with KKR at all because KKR does not do deals in this $3 to $10 million space.
Yeah.
Obviously, I got approvals from them and a lot of enthusiastic support.
And I think they put in some money, right?
Yeah,
You mentioned. Yeah.
KKR seniors did, yes. Yeah, and I think, I mean, you can stretch and say maybe I learn a little bit myself, but that's like, kind of a scholarly statement that I will also learn. But frankly, I'm happy to give gyan to the entrepreneurs and spend time with them. I make sure every deal that we do, partners run it, but I definitely spend some time with the founders before we invest money. I mean, that much we have learned over the last 15, 17 years, the mistakes we made. That, what do you look for in people? Are they listening to you? Are they not listening? Is he going to listen? Is he not going to? Again, you're not a magician. You won't know it on day one. But you get a fair sense of that. Or क्या reason है? Nothing. And then, ये हो गया fund. So we're now looking at another fund. And now we're starting a small merchant bank also with 10 families. It's called Arjav. And that merchant bank will basically
nice
try to
name.
create, Arjav. Arjav Capital Solutions. And we are 10 families who got together, very diverse families. 4 from overseas, 6 from India. And we are trying to build a merchant bank so we can curate private deals again in the private market space or mid-cap space and take ownership, take control. So let's see. So busy with that, a little bit with the government.
Still a super busy life. I know with the government, you've been advising them, helping them where possible. Lots of people have wanted to work with you, especially young professionals. You've done a bunch of hiring, but you come from industries where you never hire too many people. So you have to make very important picks. That. How do you do that? What are some questions you've asked? Like, who are some people who've you've groomed?
Grooming, I mean, I've done, lots of people have moved on from city and moved on, right? I mean, KKR is still very young in India. It's only 15 years. So in KKR, also a lot of our people have now moved overseas. But I think the main thing I look for in hiring is that I try to put myself in the shoes of the guy I'm interviewing firstly. Because a lot of them don't take decisions. If you look at an average CV, and I'm seeing so many CVs nowadays for the fund and even for KKR, I used to see earlier, so many job changes. I mean, I don't understand how they can change 5 jobs in 15 years. It just beats me. And now the youngsters I'm seeing in the tech fund, they've changed 3 jobs after Wharton in 3 years. And I keep wondering, what the hell are you where are you going to settle down and why? So I'm looking for people. See, I definitely look for good education background. Okay. I don't know why, but I'm just biased. Maybe it's the old city hangover or the KKR hangover. And I look for some kind of stability in their past and good reasons as to why they have left those jobs. You can make out in 2 minutes. Everyone says, I thought I could learn more and move ahead. That's all bullshit, frankly. This whole concept of young guy telling you I want to learn more and therefore I moved out. Why did you join in the first place? So I don't understand that. So, and secondly, because once you stay in a place, you make a career for 8, 10 years, then you have a good reason to move out here. I've only done 2 jobs in 40 years here, frankly. Right?
And done them really well.
Yeah. So I think look for some stability in their thinking. The third thing is got to get a sense of hunger here. I just think you got to get a sense of hunger through some questioning, challenge them on a few things on the economy or on the business strategy. You got to get a sense of their conviction and hunger when they're making a pitch to you or talking to you. What else? I mean,
domain expertise, finance, you only have
all
finance
that we do.
people.
More than KKR and here, we give them case studies to do. We look at how they think, and all that's the right stuff. But you still get it wrong many times. Frankly, I get it wrong many times. I would say, 3 out of 10, I got things wrong on the people side. Either they just come in and they want to coast along, or they are restless again and want to move out. I just lost a guy within a year of hiring in my new fund. And, but I think he's just a restless kid. He'll probably come back. So it's like that. And at some level, I don't know how to describe this, but I look for some degree of kind of spirituality in a guy. It's too early, but you can make out talking to somebody, is he spiritually secure? Shanti hai ki nahi mind mein? Okay. So, pata lag jata hai, you can make out.
Spiritual
Like,
security. That's fantastic.
yeah, because it's you can make out, and I see, I in fact tell so many of my seniors, even in the earlier days, yeah, you have so much to thank God for. You got a good family, you got good health, you got a good job. You just get down and do your job and be creative, and because I think creative hustling should not be misconstrued. You
Hmm.
know, good creative hustling is good, yeah. I mean, what's wrong with it? Okay. But just to coast along doesn't really fly with me. So you can be spiritually secure, but you've got to be creative and energized and energetic. And like in this new fund, these teams that I've got, youngsters, they will bring in the deals, because where do we get the deals? We don't have now a system like KKR where you call a bank and the bank gets you deals. Okay, here you got to go to the angel networks, you got to go to family offices, you got to attend conferences, you got to do this. It's a different funnel now for us.
Right.
Yeah, you go to Harvard or London Business School, meet the kids and say, okay, give me your angel network. You got to be hungry. If you're not hungry, तो कैसे आएगा? Deals कैसे आएंगी? So it's a different. So I look for, yeah.
But it's adventurous for sure. But this is
Yeah.
super helpful on the spiritual security. Just the last section, I think I read this book by an INSEAD professor called Couples Who Work. And it seems to me that you, Falguni, and your entire family um, have really nurtured and supported each other, despite the fact that all of you have very busy lives and very busy careers. What does that look like? What does making the relationship work with such busy and important jobs entail? What are some things that both of you did, you and Falguni, that really set you up for marital success?
So we are the same batch from Ahmedabad, and I think यहाँ पे there's no secret sauce. Basically, we have respect each other's jobs a lot from the beginning, right? I was traveling the world and running up and down all the time. She would be fine with it because she knows that's what my job demanded. Then she would run around a lot with this whole capital markets and banking job in Kota. And that's fine. So we're not like, I think egos nahi hai zyada. There are not too much of ego in either of us. That's one. And I think because we are both professionals, she also worked only in two jobs, right? Ferguson's and Kotak. That's it. So I think we know what these jobs entail. And then you just have to give the space to the other person. But I don't think there's anything more than that. Now it's a bit different because now she's so busy. So it's a different ballgame. So now I cannot even expect. So we don't expect, like, if I have to, if we have to say, okay, for holidays we plan, but many times I have to be in her place to help out. I do that because, the mothers are with us. I don't expect her to be there for something which, there's some festival or something. I'm happy to do it. So I think ego is one thing, and secondly, that's how, we've been all brought up like that only. So we don't demand. Main cheez, we're not demanding of each other कि भाई मुझे time चाहिए या ये करना है तो you've got to be here. I don't think any one of them. In fact, just today only she said there's Ganesh Chaturthi coming, so will you be here for the beginning of Ganesh Chaturthi or for the last day of Ganesh Chaturthi? Because we keep Ganesh. I said, okay, I'll try to make it for the 7th of September. That's it. Now we've just been blessed with a grandchild. My daughter just
Congratulations.
a granddaughter. So now she's like super busy. She has to also spend time with them to help her. So now there's no way I can demand something. I just can't wake up and say, "Chalo, a long weekend and let's go to Srinagar or something." You can't even think of saying it.
Right.
Even when you say these things, it creates then as if the other person has to say negative. So it creates an expectation imbalance. So हम तो मतलब इतना वे training हो गई है that we know each other well enough to know कि तो बोलना ही नहीं है इसके बारे में because it'll just create an imbalance. Because then she said, no, I can't. Or if she asks me to go to something, in some temple in Gujarat, I say, don't even ask me. I don't go to those places. So I think वो थोड़ा understanding अच्छा हो गया है.
That's really, really fascinating.
And now we really support her. In NYKAA, she's done such a fantastic job, and we support her in many ways. We debate at home some strategies and all, but ultimately she decides. She and the kids and the business.
When you look back at your life, I don't know about like others, but for you, seems to me that you came from a middle class family, educated middle class family in India, and you've built your category of one in a way. When you look back, how does it feel? Do you feel that you've arrived, you've really made your 18-year-old self proud what's it like? Any parting advice for young professionals who are, planning to be at your position or Falguni's position in a few decades?
Hey, kabhi I feel, I could have taken a more international career. That obviously was a possibility. If I'd taken the city international jump and gone out when I was resigning to join KKR. With KKR, the decision became pretty simple. Once you go to private equity, you're going to be an India guy. That's pretty straightforward, right? So I think sometimes I think I could have gone international, and I would have been, some Fortune 100 company somewhere. I would, once you're overseas, I would have been in one of those positions, right? But पता नहीं upbringing की बात है क्या, I used to read the Bhagavad Gita in the old days every day when I used to live with my grandparents. So सिखाया गया था कि भाई अपना do your work, duties करो, अपना करो, and whatever will happen for the good. So that somehow, Utkarsh, has been ingrained in me, now ingrained in Falguni, and we're hoping the kids also understand that. And that is where that spiritual security we spoke about. I think for me that becomes critical when I see people's expectation every day. या ये क्यों नहीं हुआ, या उसके पास वो है, he has, I don't have. Touch wood, हमारे में that's not there. So I don't actually have any regret. Could I have been in a different place if I had not taken the decision to join KKR India? Yeah, maybe. But then I would have missed the whole India boom. I would have missed time with my parents for so many years. Now my mother is 92; she stays with us. So there's always some upsides, some downsides. So we actually don't analyze too much. I think analysis करने का कोई फायदा नहीं है. Then you just create that grief, and then it's inside your tummy. You don't need all that. यार जो है बहुत है. And अपना काम करो. Nothing has changed for us. With NYKAA, without NYKAA, with KKR, without KKR, nothing has changed. Same.
Yeah. Does your mom finally understand private equity, or assuming she didn't?
Not a chance. She doesn't understand. She just wants to always see. She likes to see Falguni's photo in the press or my photo, and she's damn kicked about it.
So she is proud.
Yeah. Very simple. Photo aani chahiye, bas, simple.
Sanjay, you left us with so much to think about. Of course, I learned a ton about careers, but the one thing that will stay with me is spiritual security, and the way you phrased it, the examples that you gave. Thank you very much. It means a lot to me, and for your time. We're going to publish this, of course, on Network Capital, and this is going to hopefully help lots of executives, young professionals in India and around the world. Thank you, Sanjay.
Thank you. Thanks for the opportunity. Hope it was useful. Yeah, thanks.
It was super useful. Thank you.
Okay. Thanks. Bye. Take care.